Picture this: Karachi, Pakistan, the early 1970s. A shiny new tower scrapes the sky, the headquarters of a bank that would soon become legendary and infamous. This is the story of the Bank of Credit and Commerce International, or BCCI. In 1972, a charismatic Pakistani banker named Aga Hassan Abedi started BCCI with a relatively modest seed investment of just $2.5 million. But in less than a decade, it exploded. It became the fastest-growing bank in the world, operating in over 70 countries with millions of customers. The speed of its expansion was astonishing, spreading faster than gossip in a small town. So, what was the secret sauce? Well, it might have been cosmic. Abedi wasn't your typical pinstriped banker. He was a self-styled mystic. He would sit in meetings, eyes closed, and declare that BCCI wasn't just a bank, but a divine gift, directly connected to the universe. One employee later said it felt like they were banking on stars, not cents. His CEO, Swala Naqvi, would just nod along earnestly, promising to make the profit gods very happy. Abedi's core philosophy was personalized service. And by personalized, he meant granting enormous loans on little more than a handshake. If a wealthy sheikh had a sudden whim, BCCI was at their beck and call any time of day or night. The rumor mill was wild. They said a visiting sheikh could call the BCCI London branch at midnight, and like magic, a suitcase full of cash would appear at his hotel door. Lavish gifts, personal attention, and zero friction. That was the BCCI promise. Naturally, this approach made traditional Western bankers a bit nervous. Early on, auditors from Bank of America, an initial partner, raised red flags. They pointed out huge loans with virtually no paperwork to back them up. An executive privately warned Abedi about the missing documents. Abedi's response? He just leaned back, completely unfazed, and said, "Don't worry. I know these guys personally. Paperwork? Who needs it? I handle it with my heart." Business, he claimed, was a spiritual bond. He asked them to trust him, even without receipts. And for a while, they did. The bank grew like a wildfire, fueled by this laissez-faire attitude. By the late 1970s, even the skeptical US banks were getting comfortable. Bank of America quietly sold its stake back to Abedi, walking away with a tidy profit. A few of its own officers even jumped ship to join BCCI. It was as if America had accidentally helped create the very entity that would later cause so much chaos. Little did anyone know, this personal touch banking also included some very personal, very secret backdoor deals. But we'll get to that. Now let's fast forward to the 1980s, at a BCCI branch in London. The clientele shuffling in and out looked like a casting call for an international spy thriller. Princes, crooked politicians, and even terrorists. BCCI's client list was a who's who of shady VIPs. Take Abu Nidal, the infamous Palestinian gun runner. In 1981, he had a $60 million account at the BCCI London branch. According to the branch manager, Nidal treated the office like his personal lair, sometimes even dragging the poor manager along on shopping sprees for Gucci ties. Imagine that. Then there was the Saudi billionaire sheikh, who used BCCI like his personal piggy bank. He funneled millions into a doomed Hollywood film called Brenda Starr, all because he had a crush on the lead actress. As the LA Times bluntly put it, a BCCI could be used as the personal piggy bank of the rich and royal, and apparently of smitten movie producers. An advisor for the sheikh's family once told bank staff, "If she doesn't like spending her own money, it's our honor to share ours." The bank was also very cozy with some of the world's most notorious dictators. General Manuel Noriega of Panama, for example. He opened a secret manager's ledger account and gave strict orders. None of the staff, particularly Panamanian staff, must know about this account. He wanted his drug money kept extra quiet, and BCCI obliged. They set up stashes of cash for him, funded his lavish vacations, and even arranged bribes, all in exchange for a steady flow of his dirty money. The Panama branch manager simply said the account was strictly off the books. But it wasn't just criminals and dictators who loved BCCI's flexible services. The CIA was a fan too. A CIA official later admitted they used the bank to pay their agents and funnel support to Afghan rebels during the Soviet-Afghan War. In one bizarre instance, the U.S. Agency for International Development asked BCCI to procure 1,000 mules for the Afghan guerrillas to use in the mountains. Yes, mules. The bank that moved millions for drug lords was also in the livestock business for spies. In short, BCCI's entire structure was a circus of absurdity designed to hide the truth. It had two separate sets of auditors, one in Luxembourg and one in the Cayman Islands, who deliberately covered for each other. Its books were a jigsaw puzzle of secrets, with pieces scattered all over the globe. Trying to regulate BCCI, as one official joked, was like trying to catch a ghost in a magic show. They were masters of disguise, turning massive fraud into what looked like quirky corporate policy. And the world was about to find out just how deep the rabbit hole went. By the late 1980s, the Bank of Credit and Commerce International, or BCCI, had become so audaciously corrupt that it was impossible to ignore. Its web of deceit was so vast, so tangled, that regulators across the globe finally started to take notice. In a rare show of unity, the Bank of England, Luxembourg authorities and others formed what they called a College of Regulators, just to try and keep tabs on this rogue institution. Meanwhile, across the pond in Washington, a U.S. Senate subcommittee began digging into BCCI's deep connections to money laundering. They weren't just shuffling papers, they were getting creative. In fact, their approach was something straight out of a Hollywood script. In 1988, the IRS staged an elaborate, full-blown sham wedding in Tampa, Florida. The entire event was a meticulously planned sting operation designed to lure high-level BCCI executives into a trap. The groom was an undercover agent posing as a shady international trader. The bride, she was also an agent, and her bridal attaché wasn't filled with lipstick and tissues. It was packed with incriminating documents. They had everything: tuxedos, champagne, a wedding cake, all of it spiked with subpoenas, and it worked beautifully. Key bank officers, eager to celebrate what they thought was a union cementing a lucrative, illicit partnership, flew in for the fake nuptials. Instead of hearing "I do," they walked straight into an FBI ambush. One agent, probably grinning, might have said something like, "Surprise! Who wants to say 'I do' to money laundering charges? You're all under arrest." It was a masterful, almost comical takedown, proving that sometimes fighting crime requires a bit of theater. While the Americans were busy crashing weddings, investigators back in London were piecing together the puzzle from a different angle. The breakthrough came from an unlikely source: BCCI's own auditor, the prestigious firm Price Waterhouse. Initially, they were part of the system, but the sheer scale of the fraud became too much for even them to ignore. By April 1990, they couldn't turn a blind eye any longer. They officially flagged what they described as false or deceitful transactions in the banker's 1989 accounts. This was a huge red flag. An auditor pointing a finger at its own client is a very big deal. By October, their warnings grew even more severe. They reported that bank managers might have actively colluded with major customers to misstate transactions. In the halls of BCCI, the second in command, Swaleh Naqvi, might have tried to downplay it to the bank's founder, Aga Hassan Abedi. "Sir," they said, "colluded. That's just like a friendly hug with money, right? Perfectly normal business." Of course, it was anything but normal. Abedi, the charismatic founder, had suffered a heart attack back in 1988 and had officially handed the reins to Naqvi. But the change in leadership did nothing to slow the colossal fraud machine. If anything, it seemed to accelerate. The gears of deception kept purring along so vigorously that Price Waterhouse had no choice but to escalate. Their professional reputation was on the line. The final straw came in December 1990, when a BCCI informant whispered about massive unrecorded deposits being made. The evidence was piling up, and the walls were closing in fast. The era of plausible deniability was over. By the spring of 1991, the atmosphere was electric. At the offices of Price Waterhouse in London, accountants were working around the clock, furiously crunching numbers, connecting the dots of a financial conspiracy that spanned the globe. Then, in June, they dropped the bomb. They released a blockbuster report that laid it all bare. Irrefutable evidence of massive and widespread fraud that had been going on for years. This wasn't just a few bad apples. The entire orchard was rotten to the core. The report was the final piece of evidence the world's regulators needed. The College of Regulators that had been cautiously observing from the sidelines now sprang into action. The governor of the Bank of England probably gathered his team and said, with grim determination, "Good luck, gentlemen. This is going to be interesting." And interesting it was. On July 5, 1991, in a stunning display of international cooperation, a coordinated raid was launched. Simultaneously, across multiple continents and time zones, regulators and law enforcement agents stormed into BCCI offices. Imagine SWAT teams bursting into plush, marble-floored lobbies, scattering coffee cups, and sending panicked bankers diving for cover. At exactly 1 p.m., London time, 8 a.m. in New York, the official closure order landed. BCCI was seized, its assets frozen, and the process of liquidation began. The self-proclaimed Third World Bank was shut down in a single decisive blow. The immediate fallout was catastrophic. Over 1 million depositors, from small business owners to ordinary families, were left in shock. Their life savings suddenly gone, locked away in a bank that no longer existed. In the London office, a regulator might have yelled, "Security! Hand over the keys to the vault and step away from the money tunnels." The legal hammer fell just as swiftly. Within weeks, New York's legendary district attorney, Robert Morgenthau, a man famous for taking on financial titans, announced a sweeping 12-count criminal indictment against BCCI itself, its founder, Abedi, and his successor, Nakvi. Morgenthau didn't mince words. He stood before the press and declared it the largest bank fraud in world financial history. The scale was breathtaking. He detailed how BCCI had secretly funneled millions of dollars through Manhattan, systematically lied about who really owned which banks, and kept its depositors completely in the dark. As he put it, "Here's to justice, even if it's late and global." But the revelations didn't stop there. In November 1991, federal prosecutors dropped another bombshell. They charged BCCI and its leaders with illegally and secretly controlling an American bank, the Independence Bank of Los Angeles, using a Saudi frontman named Gaith Farian as a puppet owner. This was the final nail in the coffin. The scheme was so intricate, so brazen, that BCCI's own liquidators, the team from Deloitte brought in to clean up the mess, had to plead guilty to U.S. charges on behalf of the now-defunct corporation. This paved the way for the U.S. government to seize all of BCCI's assets within its borders. In the end, the bank was forced to pay $10 million in fines and forfeit a staggering $550 million in U.S. assets. At the time, it was the largest single criminal forfeiture in American history. That's a whole lot of piggy banks to smash. For the agents who had spent years on the case, it was a moment of victory. Mission accomplished. Or was it? The spectacular collapse of the bank was just the beginning of a long, convoluted, and deeply frustrating aftermath that would drag on for over a decade. It was a legal saga of epic proportions. Many of the key players, the masterminds behind the fraud, managed to evade justice. Abedi, the founder, remained in Pakistan, protected by his poor health. He never faced a jury and died in 1995, with the indictment still hanging over his head. Gaithepharion, the ghost investor used as a frontman, became an international fugitive and remained on the run until his death decades later. Even prominent American figures who got tangled in BCCI's web, like veteran politician Clark Clifford, were largely spared. The US government declined to prosecute him, citing his advanced age and failing health. For the victims of BCCI, the depositors who lost everything, the legal process was like watching a bizarre three-ring circus of endless litigation. In the UK, the government set up the Bingham Inquiry to investigate the regulatory failure. In a truly ironic twist, in 2004, BCCI's own liquidators ended up suing the Bank of England for misfeasance, basically accusing them of not doing their job properly. That case collapsed in 2005 after years of astronomical legal fees. The trial was notoriously long and complex. One lawyer's opening speech dragged on for an unbelievable 119 days. At one hearing, the stacks of legal files separating the two legal teams were so high they were nicknamed the Berlin Wall. You can just picture an exhausted lawyer pleading with the judge, "Your Honor, I need more coffee," and possibly a forklift for these documents. Slowly, a few guilty pleas did trickle in. A shipping tycoon and co-conspirator named Abbas Gokal was sentenced to 14 years in prison in 1997 for his role in a $1.2 billion fraud scheme connected to the bank. The American bank that BCCI had secretly controlled was eventually sold off and stabilized. But for most, the BCCI case dissolved into a strange mix of fable and farce, a cautionary tale woven into law books and boardroom legends. It was like a casino heist blockbuster, but filmed in slow motion, drowning in red tape, and with a deeply unsatisfying ending. The world's most corrupt bank was gone, but true justice remained elusive. The real shocker is how wide BCCI's tentacles were. This wasn't just a Middle East or Asian story, it spanned continents. From glitzy casinos in Monaco to shadowy vaults in Panama and the bustling offices of regulators in London and Washington, BCCI was everywhere. The bank secretly owned or controlled multiple banks from Miami to California, all through a web of nominees and frontmen. It was a financial hydra with heads in over 70 countries. But what were these heads doing? Oh, just a little bit of everything you're not supposed to. BCCI handled drug cartel cash. It facilitated weapons technology sales. It financed dictators. And, in a twist of irony, it even played banker to the CIA. A US Senate report later confirmed what many had suspected. It found that BCCI had been set up deliberately to avoid centralized regulatory review. Think about that. Its entire structure was designed to be a ghost, a phantom that no single country's authorities could pin down. It was a spider's web of shell companies, back-to-back loans that existed only on paper, and secret shareholders whose names were buried under layers of corporate deceit. The bank was an illusion, a magic trick played on the global financial system. But when the magic trick was revealed, the consequences were devastatingly real. By the time it finally collapsed in 1991, the losses were estimated to be somewhere between $10 and $17 billion. Ouch. That's a staggering amount of money to simply vanish. In the end, liquidators from Deloitte were brought in to sift through the wreckage. They managed to recover some assets, clawing back funds from the elaborate network of fraud. Some of this forfeited cash was used to pay back a portion of what was owed to depositors and other banks. But for many, it was small comfort. Most of the money was gone, vanished into the offshore ether, lining the pockets of criminals, despots, and who knows who else. The cleanup was a messy, decade-long affair. In a truly bizarre epilogue, BCCI's trustees even sued the Bank of England for negligence, accusing the regulator of failing in its duties. The case dragged on for years before being withdrawn in 2005. It turns out, Supervising BCCI was like trying to catch smoke with a net. The whole system was designed to be untouchable. And let's not forget the colorful cast of characters in this financial soap opera. At the center of it all was Agha Hassan Abedi, the mystic, charismatic founder who envisioned a bank for the developing world but created a monster. Then there was Swaleh Naqvi, his slick, operational right-hand man who executed the grand, fraudulent vision. We had Gaith Faraon, the powerful Saudi tycoon who smiled in royal portraits but was a key nominee, pulling strings from the shadows to help BCCI secretly acquire banks in America. And then, on the other side of the Atlantic, you had Clark Clifford, a former presidential advisor and the ultimate Washington insider. He and his law firm handled almost all of BCCI's legal work in the US, treating the bank like a prestigious social club, all while claiming to be oblivious to the rot within. His defense was essentially, "I was just their lawyer, I had no idea." It was a defense that few believed. This wasn't just a group of rogue traders, it was an ensemble cast of the powerful, the connected, and the deeply compromised. But the story gets even more cinematic. To bust the bank's money laundering operations, U.S. Customs agent Robert Mazur went deep undercover, posing as a corrupt businessman named Bob Musella. His code name was Flash, because he was always flashing incredible amounts of cash to gain the trust of cartel financiers and BCCI bankers. The operation, codenamed Sea Chase, was so elaborate it culminated in a fake wedding in Tampa, Florida, attended by drug lords and crooked bankers from around the world. Mazur married a fellow undercover agent. After the I-do's, federal agents burst in and arrested everyone. When Mazur's true identity was revealed, he looked as shocked as the rest of us. You can just imagine him thinking, "Can you believe I had to marry a mannequin?" Well, at least she didn't talk too much. And on the British side, you had the regulators at the Bank of England, whose faces must have just said, "Blimey," on a daily basis, as the sheer scale of the fraud was slowly unveiled. It was a circus, and the prosecutors and auditors who were finally brought in arrived just in time to shout, "Bingo! We found it!" after years of whispers and warnings. It was a classic case of everyone seeing the smoke, but no one being able to find the fire until the whole building was engulfed in flames. In the decades since its collapse, BCCI has become banking's ultimate cautionary tale. The legal battles dragged on for years. The House of Lords even ruled in 2000 that BCCI's trustees couldn't use European Union courts to sue the Bank of England. The main lawsuit against the bank finally ended in 2005, becoming the longest and most expensive civil trial in British legal history, with the Bank of England ultimately victorious after the liquidators' case collapsed. Meanwhile, the name BCCI still haunts regulators and comedians alike. It's become financial shorthand for fraud on an unimaginable scale. For accountants, it remains a nightmare, a textbook example of how a company can be deliberately designed to deceive auditors. When Abedi died, a 2003 New York Times obituary summed up his legacy perfectly with the headline, "In the shadow of a vast fraud." So let's raise a toast, maybe with a non-alcoholic beverage from a very legitimate onshore account, to the biggest, most audacious banking caper ever conceived. We laughed at its absurdities. We cried at the devastating losses suffered by innocent depositors. And ultimately, we learned a valuable lesson. If something in the world of high finance seems too outrageous to be true, it just might be a BCCI. Thanks for sticking with us through this wild story. If you found this tale of financial chaos as fascinating as we did, make sure to hit that like button, subscribe to the channel, and ring the bell so you don't miss our next deep dive. See you next time.